are no different from your coroners. You know, when you watch these CSI movies, isn't it? Someone gets shot. The person's lying there. Then the detectives call the coroner. The coroner walks around the body, and they always have these nice, shiny black shoes, isn't it? And they stand there, and they poke the body like this. And then they say, yes, the person is dead. Isn't it? Everyone knew the person is dead. But now I'm just telling them the same thing. And that is why the auditing profession is in the mess that it is, because in real terms, they add very little value. But if you look at professional accountants, and if they do their engagement in terms of preparing financial statements or independent review, you'll see that they add value to businesses. And that is what we're going to speak about, how you must use the standards.
I just want to also add on to the point is that, remember that the world is facing a number of crises. If you look at South Africa with the Steinhoff debacle and all the debacles that's unfolding, Bosasa, etc., what you're quickly finding is that while everybody has blamed the auditing profession and put the auditing profession under scrutiny, they're actually looking at the lines of defense that actually builds up into an audit. And the role of the accountant is actually one of the lines of defense in terms of the presentation of financial statements, the selection of accounting policies with management, advising management on those type of issues. So what they're quickly finding out is that what we're going to talk about this morning under the Code of Conduct is not actually, people actually try to comply with the standards, but it's actually about application of the standards in terms of the business model. And what you're finding these days is this gross neglect by accountants in fulfilling their basic responsibilities of applying their professional judgment. So we're going to spend a lot of time this morning on looking at areas of professional judgment in terms of the Code of Conduct, in terms of the accounting standards and the engagement standards that you ought to be doing. If you pull out, in South Africa we have something called the CIPC. If you actually go and pull out financial statements from the CIPC, there were cases now that we are investigating where accountants have actually printed out financial statements, signed it without reading it, and there were duplication of accounting policies. So tell me something, if you're actually just printing something off the system, and you're actually not reading what you're signing, and now the profession is in scrutiny, and you have documented 10 years worth of this company's information, and a peer is now going to take this information and is going to read it and is going to ask you, why did you duplicate an accounting policy? That's an example of gross neglect from our part, is that we haven't actually learned how to integrate a system. We've learned to actually print off information from a system. So we're going to talk about the risks of actually over-disclosing information this morning, not reducing the information for your client, confusing the banks in terms of not clarifying what the expectation is of the information that is being produced, matching accounting policies to tax standards, what is the risk, and what you should be aware of. In South Africa, we also had something called the World Bank, which visited us about 5 years ago. 5 years ago. So you all know, like, Namibia will also be subject to the World Bank doing a visit. And when they did a visit 5 years ago, one of the issues that they raised was they were concerned about the state of the accounting profession in South Africa. And this was before all the scandals. They said that the accounting profession in South Africa is unregulated, one. Secondly, there's too many people calling themselves accountants out there. And secondly, there's a lack of monitoring of these accountants. And this poses a huge threat to the economy, and they raise lots of issues like professional judgment, competence of people not doing CPDs, participation in committees like IFAC, whatever else it may be. And they're actually concerned about the money they lend to the economy. And they're actually coming back for their second review. And South Africa hasn't managed to regulate the profession since. So you can imagine what the cost of lending is going to be on the economy in an unregulated profession in light of these scandals. So when you actually do for your World Bank review, you don't know how fast your ministry might actually act after your World Bank report comes out in terms of who should be accountants, who should not be accountants, what exactly needs to be regulated. Prof is also going to speak about in 2020 where we're not going to have a profession anymore. The second thing you need to understand is that we all know that 2020 and 2021, the majority of accountants are going to be unemployed. Technology has taken us over. So what is left for us to do what is the areas of human interaction that is needed for us to actually sustain these accounting standards. Making sense? And that's a lot of the things that we're going to talk about this morning. Professional judgment, professional skepticism, how to craft accounting policies that make sense to the business. And the heart of that is going to actually be what we call the conceptual framework. Your concepts and your principles, your underlying assumptions when you prepare financial statements. And if you actually get that incorrect, then you might as well just tell the computer or tell the clerk, just print out the financials. Nobody cares about it. Okay?
Okay. And then just the last one is the accounting standards, which we'll speak about. And I think you'll see that most people who cook today use recipes, isn't it? They go and they weigh the salt, they weigh the spices, they weigh the meat and everything. I always say my mother's food was the best and she used no recipe, but she applied the principles. Isn't it? She just said, I need to throw salt in, took a hand and said, it's a pinch of salt. What a pinch of salt was, no one knows. But she understood the principle and she used the judgment in terms of whether it satisfies what I want to do. And that is the area into which professional accountants are moving. Can you judge? Or do you want to be a policeman? Apply rules. Okay. So if we now go on to public interest, I think Yaeesh spoke about trust. When you sign that set of financial statements, the people out there place so much trust upon what you are saying and your signature that if you disappoint them, no one wants to know you, not even your parents. And that is what public interest is. It's about gaining people's trust. How many of you, when you go to a doctor, you know, you got a heart problem and a doctor say, you only got a week left to live. What's your reaction?
Spend all my money.
I need a second opinion. Isn't it? And if the second opinion confirms the first one, I need a third opinion. I'm going to get so many opinions until someone disputes what the first opinion was. And that is what trust is all about. People need to say, I trust you. If you say something, I know that you have done your work properly. The second thing is reliability. How many of you, when you do your financial statements for the clients, ask you one question? Where must I sign? Because they don't read the rest. Isn't it? And then you say, don't worry, it's page 2. Then he signs, you sign. He takes the financial statement which you give him. He say, thank you. He closes it. He opens his drawer. He takes out last year's, throw it in the bin and put this year's in the drawer. That is the value we're adding to clients currently. True or false? But yet, what we actually provide for them, we don't charge for. Isn't it? How many of you sit with your client and explain the financial statements to them? All of you. How many of you charge for it? No one, because you don't value our explanation to them. I don't do financial statements. I explain financial statements to people. And I get paid more than the person who prepared it.
Just on that point, most of you will know that I actually did my PhD in SMEs and accounting. And one of the issues, and I interviewed a large sample of SME owners and accountants. And one of the issues that SME owners always raise in the business is the timing of the accountant in the business. So when it comes to the issue of financial statements, and why do they see it as valueless, is as Prof said exactly, you're coming as a coroner into the business. Is at the point where the thing actually adds no value, you actually make them sign. So because at the point of where you actually started preparing the financial statements and you actually never set out with them in actually crafting those accounting policies and showing them exactly what you're trying to achieve and what they stand to lose in terms of risk, they actually saw no value in the process. So what you're going to find with digitization and the 21st century accountant is that because everything, as you know, I don't even know who I'm speaking to on the other side of this camera over here, is that we're slowly becoming isolated. And the less human interaction you have, the more higher the risk of what? You becoming redundant. So that piece of valuable information of actually explaining the concept to your client of what you actually produce for them is actually what's going to sustain your business going forward. Because ultimately, you're never going to see your client, possibly, if you actually don't create the opportunity to see them. And if you're actually not seen, you're actually not needed. Okay? Because that's where blockchain and everything kicks in. If you're not seen and you're not valued, you're not needed.
And the last one is your integrity. And I think in terms of the integrity is that when your clients see you, they must look at you that you are a savior to them. You are Messiah. How many of you people categorize yourselves as a professional accountant? How many of you categorize yourself as a business doctor? I'm a business doctor. I provide solutions to clients' problems. I don't provide them with financial statements. That the system does for them. And that is what we need to say. I'm a business specialist in terms of providing solutions to problems which clients have. How many people go to doctors today when they got the flu?
No one.
It's cheaper to go to the chemist. How many people will have a heart attack and go to the chemist?
No one.
No one. Now that is what you must see yourself as. You are business specialists in providing results to clients. And if you can do that, you can therefore be held accountable.
Also, with this public interest role, you must understand this is very important to understand, is because when the profession is actually crafted and when legislation is actually going to be crafted going forward, if you look at what like IFAC is driving globally, what the World Bank is driving globally, it all impacts you even here in Namibia, because this is where your money comes from to your economy. This is who lends you your money. So what you find is that there's certain characteristics of a profession that you actually don't have it anymore. People don't regard you as being professional. So if you actually consider yourself to actually be number crunchers, if you actually consider yourself to basically just be quantitative information specialist, etc., you're actually going to find yourself without a profession in exactly 18 months' time. Because the way the thing is moving so quickly is that everybody needs an area of specialism to still be consider themselves to be a professional. So what Prof. Small is actually saying here is that if we actually don't start putting ourselves into this public interest role and start showing our clients exactly that how we've specialized in the preparation of financial statements, how we specialize in the business advice of understanding the business, very, very quickly, IT and blockchain is going to absorb the mechanics that we're doing. And basically then, if you're trying to compete with the computer in terms of mechanical robotic functions, you're going to actually be out of a job, you're going to be out of a client. So what is then left? It all starts with public interest, and the second thing underpins that is professional judgment. Okay? And the professional judgment is one of the most complicated areas in the accounting standards that could actually lead or mislead information. So if you look at anybody over here, even if you speak to a second-year varsity student and you ask them, go do this calculation, go revalue an asset, go put in the number. Everybody is so focused on the number that nobody's actually concerned about the economic assumptions around how did you create this reality, what is the business about, how do I actually come about this number? And when the numbers start not to make sense anymore, and peers start reviewing your work, and it takes one thing to uncramble. I mean, it cost KPMG, I think, 25,000 rand, a 25,000 rand client to tell you that the number didn't make sense anymore. And that's how things start to cripple. So it all starts with this public interest role. If you actually don't have that mindset that I am actually here to basically see to the economic interests of society, you actually then start creating policies. It's actually behavioral accounting. And I was actually at one of the behavioral accounting seminars of the International Accounting Education Standards Board, where they said that in order for this profession to succeed, the next generation of accountants that need to come in, we have to actually change their behavior. Which means if people actually have the motive of profit making as their primary motive for entering the profession, it's actually very dangerous for what then happens as you subsequently progress into the profession. So this area of public interest is something that you and I both did not sign up for. We have to admit that when we actually registered as accountants and we actually came into this profession, we came in the mindset to actually adopt a capitalistic approach, which means that we are actually here to have a very comfortable lifestyle and we're here to earn a lot of money. But if we actually don't start balancing that risk in terms of what is society gaining out of this, very, very quickly, as we're seeing with the scandals, everything is going to start to uncrumble around us. So this is the first fundamental cornerstone of the financial statements and of your roles, public interest.
Yaeesh, can I ask, I find it very difficult. I've never lectured in an environment like this where people sit and watch me. I know I'm not as pretty as other people, but I can't, it's very difficult for me because the way I lecture is I feed off people's questions. But you're all sitting here as if I'm so impressive, I'm the president, I'm nothing. So if you have questions, please ask the questions and then I can take it as we go along. I think the next thing is code of conduct. And with the code of conduct, the first thing is that you must have professional competence, which means you must be able to only take tasks which you are capable of doing. How many of you have experience in the fields of your clients where they operate? If a client comes to you and says, I'm a farmer, do you take his job? Do you take on the client because he's going to pay you money? Or do you say, I can do work for you, but I don't understand your industry? And that is what professional competence is all about. Because, can I ask you a question? What does financial statements do? Or what do they actually reflect? Anyone? If I come to you and I ask you, tell me what the set of financial statements which you prepared, what does it do? The results of the operations? No, it tells a story. Financial statements are storytellers. Professional accountants are storytellers. Now I'm going to ask you to do a very simple exercise for me. Open your palm of your hand and look at it. After staring at your palm of your hand for 10 seconds, what do you see?
Nothing.
Nothing.
Look on the other side.
Now, professional accountants of the future is not going to see their lines on their hands. They're going to see the back of their hands. Professional accountants of the future are going to be able to predict the future, to use information to tell you where the business is going, to look at the business, your financial statements to tell you what are the challenges businesses will not face today, but they may face tomorrow. I can tell you, when you did your studies, they told you financial statements give you information about historical activities, isn't it? That's why you said it tells you the performance of the business. Why do you tell them something that they know? Does the owner know what his business is doing?
Yes.
You come there to the owner and you tell him, at the end of the financial year, you in overdraft. Isn't it? Does he cry?
No.
No, he tells you, I knew it. And I'm busy resolving it. Isn't it? Now, why do you want to tell him something that he knows already?
Just on that point there on if you, the storyteller, remember that the financial statement, as you said, it's a communication document. It's the way you communicate to your clients. Let me tell you how this actually, we talk about professional care and due competence, and the second one, integrity. So, you know, from time to time, I don't know in Namibia, but in South Africa, we have something called the Competitions Commission, and we have all these license operators, the FSBs, etc., that fines companies. So what we decided to do 2 weeks ago, we said, okay, fine, let's go check the financial statements of all these companies that got fined and see if they actually have disclosed to their investors and whoever else that they, regardless of the nature, timing, and amount of the fine, where did they put the fine, and did they say they actually got? And guess what? None of these companies in the financial statements actually disclosed anywhere that they've actually been fined by the Competition Commission, by the FSB, etc. They actually just classified it probably under operating expenses, no notes, no information, nothing on this. Things carried on as normal. So you talk about your professional care and competence and integrity. Think of the accountants preparing this information. They actually just don't care. There's actually no care, and think about it when we publish our report in 5 to 6 weeks' time to say that these companies all were charged and these companies all did not disclose. What do you think is going to be the public outcry of transparency reporting? You can't say the amount was immaterial because people are going to come around and tell you that, listen here, regardless of the amount, we want to know in the current environment that the company got a fine and why they got a fine. It's not so much about did we pay the fine. We want to just know what was this concerned about and does this affect our business going forward? Because that's what it's about. It's about the risk in the financial statements. And currently, people are not seeing that risk management tool in the financial statements. So financial statements are useless. That's what the owner will tell you. There's nothing in there that anybody actually needs to know at any given point that they don't already know.
And then just to link on to that integrity, how do you disclose a bribe which your client paid to get a contract?
Marketing and selling expenses. Advertising, yeah.
Should you disclose it? You should disclose it. How you disclose it? I can tell you it ranges from business relationship expenses, business development expenses, marketing expenses, advertising and promotion.
Who is guilty of
consultancy fees?
Think of pharmaceuticals and the medical profession. They're the most guilty of this here because that is why the Competition Commission fines them. Because think about, like, if I'm a particular brand of pharmaceuticals, I will go into clicks and discounts, etc., and say, put my brand in your shop. Put my brand of pharmaceutical products in the shop, and I'll give you an incentive scheme, or I'll call you as a doctor to a holiday destination to do a CPD thing for free. Those are actually bribes. And how would the pharmaceutical company actually classify that as? They'd actually classify it as what? Marketing expenses for the products. And what then happens is they get a fine by the Competition Commission, because the Competition Commission said that's unfair trading and unfair practices on what you're doing. But does anybody go back and reclassify their financial statements? No, they don't. Until something really big happens where you get a lawsuit where you can't actually pay through your professional indemnity or you have any funds. And at that stage, it's too late.
So the next question on that is, does the recognition of fines or bribes violate accounting standards? Yes or no? No, it doesn't. Because the accounting standards has a specific provision which says that all the information disclosed in the financial statements is based on the economic phenomenon as to why that transaction has been concluded. Substance over form. So you need to recognize it in the terms of the accounting standards. Thereafter, you must question yourself, is it ethical for me to continue? So it's two different responsibilities. And that is what the accounting standard says in terms of principles based. The principle is, what was your intention? Was the intention to further the objectives of the business? Yes. So therefore it must be recognized.